Knowing what makes the market go up, there has to be some underlying premise. What was the premise on the dollar index? This low swept it there. And then we want to look for a low risk entry to a market maker buy model. Oh. So what you're saying is anytime that the market enters into a buy program, that means that it's going to remain bullish for a length of time until it trades and traverses to an opposing pool of liquidity. That's the technical term that you'll see in the book. Okay. What this is it's smart money reversal. Smart money reversal will always, this is for your notes now, okay, will always be a purge on liquidity, whether it be a market maker sell model, which would be the opposite of this high down to that low, coming all the way back up, traversing right back to that liquidity there. Now, you may not recognize this as a new student or even someone that's been with me for a little while. You may not see this as a market maker buy model, but that's exactly what it is. They don't have to look perfect textbook, but the mechanisms behind where price is going and why it's going to go there is still remaining constant, meaning that yes, there was a willingness for traders to go long here. Wonderful. Supply and demand, not a factor. Support and resistance, not a factor. Liquidity, absolutely the lifeblood of the marketplace. So you got to stop thinking about, where prices caused the last buying thrust or the spring lower. Okay. Forget all that Wyckoff stuff. Okay. Forget all of it. It's archaic. It's simplified, simple stuff. It's so easy. All you gotta do is read it one time and you know everything about it. But now graduate from that. Graduate from it. Look at the market a little bit deeper because there's a whole lot more going on that are very, very precise, very specific things that repeat on a time-based delivery. When market went down below that low here, what was below that low? What would be resting below that low right here? In terms of liquidity, it would be sell stops, pending orders for two things. First, those individuals that went long or anywhere in here, they're not going to feel safe by putting a stop loss that's real short. They're going to want to go back to this low here because they're going to see that that is what. Well, that was very strong support because look how the market reacted. Yes, I'll give you that. It reacted like that. Wonderful. But I'm not looking at that as I'm gonna wait till it goes down here and touches this and go long. No, I want to see it go below it. Because what that will do, it will give me immediate feedback on whether or not this was a raid or if it's going to continue going lower. So it gives you a case study. It gives you an opportunity, like a laboratory experiment for the people that went through biology class or university. Remember that? You had to go through these labs. Well, this is a lab experiment every single time you're watching an old high and old low on any time frame. Why do I teach in the lower time frames? Because there's a lot of opportunity for you to do the things I teach and study. And you'll find all the evidence that this stuff works perfectly in your own hands. You don't need me making videos and recording things. So the market probes below that here. Let me move this up a little bit. So it moves below that low there. So it opened. Look how this candle formed. And these are daily candlesticks behind you up here, upper left hand corner. And just for a second, if you would please. So when the market's reaching below an old low like that, I want to see it travel below it. And by opening above that low being here, this candlestick opened right there, right there. So the opening on that candlestick's price is 96.617. And then at that moment, it starts dropping down to that low. Now, support and resistance folks would be like, okay, it's going to go up right there and want to go long there. And they may elect to go long like that, but I'm not doing that. That's why I don't trade support and resistance. What I'm looking for is, does it trade down below it? Why is that important to me? Because number one, everything that causes the market to rally high and low is always on the basis of a market maker sell or market maker buy model. Every fluctuation in price action could be broken down fractally to that very premise right there. Now, it need not be understood at the beginning of your learning exactly what that means. It just means that you're going to grow in your understanding about what that means if you're studying with me. Regardless of what you trade as a model, your entry, your silver bullet, your model 2022, for instance, model 2022, that is low risk entry. That's the part of the market maker sell model or buy model that you're trading. You may not have ever identified it as such, but that's exactly what that is. Turtle soup, that's the smart money reversal. Maybe you've never known that. Maybe you never identified it as such, but that's what it is. Second stage reaccumulation or second stage redistribution, which is the unicorn of the models, that is the biggest, most explosive, sustained price run that trades to the opposing liquidity of a market maker sell or market maker buy model. Now, for someone that's new, that sounds like a whole lot of mumbo jumbo, but I'll explain it in a moment, okay? But those continuations are simply silver bullet premises applied to that time frame that you're seeing the market maker model on.